A very good afternoon. My name is Duco de Lange. I'm Senior Vice President, Revenue and Customer Success at Sopra Banking's NEO. For years, the developments in the financial industry have been evolving faster and faster. Digitization, new engagement models, and new entrants entering the market have been top of mind for banks. Since the beginning of 2020, at the start of the pandemic, these changes have evolved even further at an unprecedented rate. Where our lives were dominated during the pandemic by Zoom meetings, customers evolved an even stronger demand for digital financial services. In the same time, a lot of new entrants entered the market with very lean and mean, but really cool and easy to use applications with great UX. And although a lot was influenced by COVID-19, for sure not all of it was. Before that, we already were faced with a historic low interest rate, which made banks define new business models. And on the other hand, consumers were really looking to invest in more sophisticated products that were previously only accessible for professionals. So from savings to investments, the market, and I think the rise of financial product distribution is really, really ongoing, and it's accelerating. So the next 40 minutes, we will be discussing the challenges banks face in doing this, but moreover, we will look into the opportunities that are there to grasp when you are capable of delivering the right product at the right time to your consumers. Joining me today is an expert in investment distribution, Mr. Steve Fogg. He is the co-founder and CEO of Participe. Participe being one of SBS's marketplace partners, and a very warm welcome to you, Steve.
Thank you, Duco, for this introduction. It's a pleasure to be here today to discuss financial service distribution. And as you said, I'm Steve Fogg, and I'm the co-founder and the CEO of the company Participe. Just a few words about Participe. Participe is a young French innovative fintech, which is made up of 35 team members, and we edit a no-code solution for online distribution of banking, insurance, and investment products. So to summarize, we help banks, insurance company, investment management firms, and their distribution network to set up in less than 1 month and without any IT development subscription channels of their financial service offerings.
That's really cool, Steve. But if you look at these developments in the market, new technology, new business models, engagements, open banking, it opens a world of new possibilities there. Fintechs and new entrants like yourself are really building thin but very deep solutions with great UX and UI. And where not long ago we were talking about anywhere, anytime, any device, that's not the future anymore. It is more or less the general expectation of consumers working with banks. So I think financial institutes are really faced and struggling to respond to those demands. And change is needed on all terrains, and that makes it even more complex. I think if you look at a bank today, they're not only having a technology challenge, but they have a product challenge, they have a market challenge. They need to look at the organization altogether. So when founding Participe, what made you think, what kind of gaps can I fill with my company there?
Yeah, if you look at the evolution of the market, you can notice that the adoption of financial services by the customers is greater than 50% today. And this is due to the change of the generation we have, and the fact that the Generation Y is the most active part of the population today. Mm-hmm. At the meantime, if you look at the digital financial service offering, you can see that the offer is very low, so less than 14% of the financial services are digital today. And as you said, there is a big trend about platformization and financial services, and that's why by 2030, the vision and the consensus of the market is to reach a kind of world where the distribution of financial services is 100% open and 100% platformized. And given those trends, that is why we created Participe, because we share this vision, we share these market trends, and our mission at Participe can be summed up in two key points. The first point is that we need to bring to digital those financial products and services to allow them to be available for subscription, as you said, anywhere at any time from any device and on any kind of platform. The second thing is that we strongly believe that all financial and non-financial institutions has to be able to add to their existing offering in order to bring some value added to the end customers, the subscription of those financial products and services. That is why today, for example, if you look at the marketplace, they are more willing to offer insurance products, for example, and it's the case of Amazon.
I think that's really interesting because digital transformation is not new. It's not the future. It is actually now. And then looking at these ratios, 14% of the products only accessible, there is still quite a big challenge. And I think if you look at the retail banking market, where Sopra Banking is really active in, we've seen these transformations gradually being implemented, starting with the more simpler products, usually. But if you look at where you are, those simpler products sound simple, but they were tough enough to actually implement. You're active in an investment market, which is a high-touch market. It's an industry with a lot of advice, like plenty of products in the banking industry are. So there is an additional complexity there. So how do you address that?
As you know, digitization doesn't mean the end of the customer advisory, see? And that is why when you discuss distribution of financial services, we are talking about a word that we name phygital, and the phygital is just the mix between the digital and the physical. So this is the proof that we need advisory when it comes to, and when we discuss investment product distribution. So if we look at the environment, you can see that the customers and the investors are looking for the most powerful digital experience they can be. And this is normal. And that is why the asset management company are investing a lot of money in those kind of digital experience distribution solution in order to help, for example, the customer to have a kind of self-care experience when they invest in those products. So when we talk about 100% self-care distribution on investment product, it's not simple as that, because first of all, you need to choose the right product, and as you say, it must be a standardized product. But in addition of that, you have to be able, technologically speaking, to automate all the regulatory, all the tax constraints, and all the complexity you can get when you need to be compliant when it comes to the subscription and an investment product. So that is why the self-care subscription of investment product is only possible, and that's what we do at Participe for high standardized products. And that is also why we believe that we need those advisors for much more complex product. And if you look at the advisory business today, you can see that they are looking for digital solution that helps them in the daily basis to ease their work. So for example, they are looking for a solution that can help them to digitize the advisor they can give to the customer by, for example, aggregating user data, by aggregating the portfolio data, by aggregating all the offering that are available on the market in order to be sure that they will give the right advice that really fits the investor needs. And besides that, they are looking for solutions that can help them to initiate the subscription on behalf of their client in order to ease, the experience and to avoid any kind of hand feel by this investor when they want to subscribe to this product. So at the end, this is a mix of self-care, subscription of this investment product and the digitization of the work of the advisor on a daily basis.
I think that's an interesting one. I think that the wish for 100% self-care and so for subscriptions is something that is not limited to the financial industry. But there is limits there, and there is an additional complexity, obviously, in the banking industry. And with your own experience as a banker, you're aware of the infrastructure that is there. Banks are technology firms to a large extent at this very moment, relying heavily on systems that usually have been built quite some time ago, with silos there, and you want to open up those core systems and make them accessible and have that data at your fingertips and moving to cloud, obviously, which are massive transformation projects that will not be completed overnight. So in the meantime, looking at banks specifically here, these are not startups, you know. What can they do in the meantime?
Well, the pressure and the regulatory pressure on the banking industry today is pretty high. And in addition to this regulatory pressure, we also have the technological pressure with the competition coming from the new actor on the market and from the GAFA. And if banks need to face those challenges, it means that they have to change everything in-house, and they have to change all the organization that is there. So they have to change the mindset, they have to change the philosophy, they have to change their infrastructure, they have to change everything in order to be more agile, okay? So they understood that, and that's why today they have two kinds of strategy. The first one is that they are intensifying the collaboration and the acquisition of some fintechs in order to bring in-house the best of technology they can get in the markets in order to bring much more value added to their end customers. And at the same time, they are changing their business model, okay? So they are moving from a more traditional business model to a kind of bank as a service business model where they can generate more value added, more additional revenue coming from the distribution, coming from the additional services they can sell above the services and the product brought by these new actors in the market. And if we just look at what are the real reason why the banks are changing those strategy, there are two main reasons. The first one is the open banking, okay? It was a great revolution, and we know it's really boosted the innovation in the banking industry. Mm-hmm. And if I look at some figures, the open banking is now, and the market of the open banking is now growing for more than 24% a year, and that is huge. And when you look at the market size that it will reach at the market size at $43 billion in market size. So it means that there is a huge opportunity over there. There's a new opportunity for banks to make money and to share the value added with the new actors in the market. And in addition, we have also the COVID-19, as you know, that really changed the behavior of the customers, that changed the behavior of the top management of the banking and the investment industry, and that make them realize that, well, the digitization is a kind of matter of life or death if you need to survive for the 10 or the 20 and 50 next years.
Mm-hmm. I think that listening to this, so on the one hand, you have this huge pressure of technology in there. That offers, on the one hand, all sorts of challenges, but also opportunities. You have the regulations like open banking, which is the same, and also opportunities and investments there. But that also, if I listen carefully to you, it opens up a world of new business models. Bank as a service you mentioned, and more fee business. And I'd like to go back to that in a minute. But you also mentioned COVID-19 there. And I think in your specific domain, what you've seen is there's been trillions of euros put into the economy by central banks to really make sure that we ease the burden on the economy. But the weird thing is, and that's a bit tough also, there is on the one hand people that have excessive wealth, they did not suffer that much, but they couldn't even spend it on the other hand. So with the very low interest rates there, where does this money go? You know, there's a huge opportunity. So could you elaborate a little bit on that, please?
Yes, for sure. As you know, today, when we look at the macroeconomic environment, we are in the environment where the interest rates are low and negative sometimes. And we think that this can last for a while, okay? And when you have so much access to money, okay, it means that you need to find where you can get the most highest return. And that's what the investors are looking for today. And if you look, for example, at the activity on the private equity sectors, you can see that the investment in startup is booming right now. And this is due to this huge amount of money we have in the market. So this affluence of money in the market really developed the appetite of investors to unlisted investment products, and such as private equity and private debt. And when we just look at the market expectation on this segment, we can see that they are waiting for kind of 55% in growing rate. And they think that the assets under management in the few years can reach $5.8 trillion. So it's just a huge amount of money. So they are now trying to invest in the real economy in order to sustain those startups.
So I think what you just said is consumers are really looking for new possibilities to invest, and those are outside of the traditional banking product. It's been also quite rigid on the one hand, it's very heavily regulated, but with globalization, people see and have access to funds there. They see these venture capitalists making great returns, usually, but they want to have a part of that. So it seems to be time to look into new product offerings there. But time is really always the issue. How fast can you act? And so what strategies can banks take there?
The banks right now, I think the real challenge for those banks is to innovate in terms of product, to develop product based on the user data, based on the experience they can get on the market, in order to fulfill the investor, to fulfill the customer needs. And at the same time, they need to deploy really quickly this offer on the market in order to face the competition you can have on the market, okay? And when they develop this new offer and they need to deploy them in the market really quickly, they have to face the compliance, they have to face the regulatory constraints, they have to face the technological barrier they can have. And at the same time, when they are discussing with their customers, they are discussing with the advisor, they are discussing with the partner, the distribution network, those guys are waiting for the most advanced digital solution they can get in order to access and in order to buy those financial services. And today, the mindset really changed if we look forward in many years ago, because look back in many years ago, because many years ago, the trend for the banks was to do everything internally, okay? Because there was not a lot of pressure on the market, a lot of technological and other regulatory pressure on the market, so they do it internally. But right now, the environment is moving so fast. So it means that if you take 2 years to develop your own solution, when you release it to the market, it's too late, because the technology just changed, and the framework and the front-end framework that are used in order to develop this distribution solution are evolving very fast. So they understood that, and that's why today those banks are using their IT resources in order to be focused on the compliance, to be focused on the internal tools in order to comply with this regulation, and they rely on the third-party providers like Partizip, for example, with some essential point for them. First of all, they are looking for third-party service provider that are easily connected with them in order to ease the data sharing between the system that is outside and their own system inside. Secondly, they are looking for third-party service provider that are comply with the regulation, that have really turnkey solution that help them to change and to adjust and to adapt themselves to this regulation. And at the end, they are really seeking for the kind of solution that are deploying and can be deployed on the market really fast, and that can be deployed everywhere really fast. So by opting and by choosing this strategy, for them, the benefit is simple. They can stay focused on product innovation. They can accelerate their go-to-market when they need to launch a new offer on the market. They can keep high the customer satisfaction, and they don't have to change the IT organization or the IT technology they already use.
I hear what you're saying. So basically, banks need to turn for you for investment distribution, right? But I'm quite sure you mentioned regulation quite a lot. And regulation, the banking industry is one of the most regulated industries in the world. So on the one hand, you always have this same dilemma. You have the product managers wanting to bring products to market really rapidly, and you have compliance saying, hey, come on, it needs to fit the framework. So you just referred to it and you said, yeah, of course you need to take it into account, but we can easily do that. But banks are big organizations. They roll out at scale. They're international. So this regulatory part, I think, should not be underestimated. So it sounds a bit easier than done. So is it really true that you can solve that as a third party in a good way?
This is a good question, because it emphasizes on the pooling and the scalability of the solution that banks and investment company want to onboard in-house, okay? And if, for example, you look at the banks and the tools that are developed internally in the bank, you can notice that pooling this solution between the subsidiaries in the banks is not something that is quite easy. So that's why they are really want to rely on the third-party provider that fits the constraints I previously mentioned. And if we look at the behavior of the banking industry regarding those third-party solution provider, you can notice that they plan to invest $9.7 billion to enhance their front office digital capabilities and relying on those third-party service providers. So it's just a huge amount of money. And if we look at the behavior of the asset management industry, we can notice that they increased by 10% their budget on digital experience tools. So this is a subject that is pretty important for them, and they understood that the customer right now is not patient. The customer need to have the right solution, need to have the right product, and need to have the right experience. And if they didn't do that, it would go to the competition. So on policy side and on our point of view, we try to address this kind of compliance, of pooling and scalability issue by developing what we call a kind of automate compliance module. And this module is pretty simple. We just generate a kind of algorithm that you can encode, and that you can encode inside all the compliance, the tax rules, so whatever you want. And this wrap all those rules and allow you to deploy, for example, your solution on the country you want and fit the local regulation, or deploy your solution for a customer you want in order to fit his profile while providing him the solutions or the investment product you want to sell.
Okay, so I think that it sounds like technology is the answer to everything, but that's a bit easy maybe. But listening to you, I think what you say is that what you do is so specialized that you look at compliance in this really specialized way. So it is built from basically in there by design. But if we go to technology, technology is great, but companies like yourself, they can support banks. But on the other hand, there's companies as well that will go head to head there. If you look at a Robinhood in the US, for instance, which is really growing very rapidly, and in investments as well, that is growing quite fast. But you know, how can banks compete there? What would be the response if you look into this market segment?
I think that the banks and the investment firms have today in the market a huge competitive advantage. Why? Because they host in-house the most extensive product factory you can get. And when you are an investor, you are looking for the deepest offer you can get in order to choose, in order to search, and in order to invest in the product that really fits your current profile. And as you know, your profile can change. And so if your profile changes, you need to find the right product that suits and that can fit the evolution of this profile. So, and when you look at the product factory in the bank side, well, you can see they have everything to be the best in the market because they have the product, and the product is the key. So if they want to compete with actors like Robinhood, it's quite simple. They just have to open access to these products, to allow the subscription on those products on any kind of platforms. And for example, if you or me, we go on our banking space and we are checking our account statements and realize that we have some extra money and we want to invest it, it's quite easier to click on the button directly into your banking space. You got the access or get the notification saying that, oh, this is the right offer that suits your need because you can get higher return and stuff like that. And you go through a kind of easy process in a few minutes in order to subscribe. This is a great digital experience. You don't have to have anything to do. You don't have to go on the Robinhood in order to invest in a product opportunity. So that's what we think. The banks need to be more open. They need to move to this open distribution in order to be more competitive in this market.
I think that what you just said is openness. So basically, banks have opportunities here to distribute their own products via different channels on the one hand, and on the other hand, distribute products from other companies to their clients internally. But those platforms that are required there, you mentioned these huge factories that they have, and you were pushing very much onto, let's say, you need to collaborate with fintech companies. So how far should banks go? You know, their tradition is to basically build a lot themselves. We see a trend there, indeed, I agree with that. But what is that decision-making process? Would you build yourself or not? So what are the key drivers for such decisions?
You know, technologically speaking, everything is possible. You can build what you want. So if you want to build a Microsoft Office suite, you can do that. If you want to build a mailing suite, you can do that. So why using Gmail, why using Microsoft instead of building it? So I think it's the same behavior you can get when it comes to financial product distribution. We believe that the job of the banks is to push product innovation. The job of the banks is to collect the data for the customers. The job of the banks is to be sure that they can fit and they can get a kind of 360 offers that can suit the customer needs. We also believe that those banks have to empower the economy, okay? Because today in the market, there is a kind of convergence between the financial services and the e-commerce. So it means that the financial services in the near future has to be accessible on any kind of platform. So if, for example, you are on the marketplace, on Darty, for example, and you are buying for some goods for your home, and at the meantime, you don't have enough money to pay cash directly. If you can get a loan directly based on your basket, this is a just tremendous experience in terms of financial product that is integrated directly in your process of buying a natural good. So we think that the banks have to make their product more accessible to those platforms, more accessible to the e-commerce in order to empower the economy. Okay, and we don't believe that the job of the bank is to become a kind of technological company, because when we are dealing with technology, it means that you need to change a bit your mindset. First of all, you have to be more open. And the DNA of the bank is not to be open. They are changing today because we had the open banking and they was forced to change. But we saw that it was pretty difficult for them to integrate the fact that they have to be more open. And when you become to be open, it means that you need to deal with a huge amount of people. And if you need to deal with a huge amount of people, you need to deal with a huge amount of technology, how you can handle that? Is it your priority? So that's what we don't believe. That's why we don't believe that the bank has to make this move to become a kind of technological firm.
Okay? I think we share that vision at Sopra Banking Software. Basically, we see that there is not only a real choice because there's so much to be addressed, and you only have the capacity and the capability to focus on what you need to prioritize on. So when banks look at their position with this massive installed base of KYC customers, these product factories that they have, maybe they should rather look at investing into, looking into digital engagement with their clients, providing great UX. If you take a digital engagement platform that enables you from within with AI, with huge UX and UI in there, open to the market, with an ecosystem mindset by design, that would open up a completely new segment. And if we look at ourselves building product today, we are not building everything. We're here for a reason as well. We have our own marketplace, and we strongly believe in that, in selecting the real niche markets and great partners there that have built something really rapidly, pretty good, and we would like to bring this to our clients. And so that is what we do in our marketplace together, and you're part of that. What does such partnership mean to you? Why are you interested in that?
I think today we are in the world of the sharing economy, okay? And when we need to generate value added to the market, to customers, we need to join the forces in order to bring the best technology available in the market for this end customer, because at the end it's the customer that pays, and at the end it's the customer that need to have the most advanced digital experience. So we share this vision and of the ecosystem, this ecosystem vision, and our technology is built around this vision of ecosystem. We have our own focus, but if we need to add value added for end customers, we can pick up the best of the technology available outside, we connect it to our technology, and we bring it in a kind of package to the end customers. And if we look at the partnership with Sopra, it's exactly the same thing. And the vision behind this is quite simple, is that, for example, if you are a bank, okay, you are using the digital banking Sopra suites, and you will say, okay, right now I have the product, but I think I can propose to my client a kind of subscription to investment product. I can push to my client a kind of subscription to insurance product because they need that, because I have this demand, but I need to do it in a short period of time, really quickly, because I don't need to miss this opportunity. It will be possible with the partnership we are building together, because
I think if I may interrupt a bit, I think what you're saying is something pretty funny and interesting. So we say, on the one hand, banks need to build an ecosystem. We, as a technology provider, build an ecosystem. You build an ecosystem, so you have a huge ecosystem working all together. And that's kind of an interesting thought, but I'd like to really get back to that later on, and also let's sink in a bit. In the meantime, if we look at our partnership together, we recently launched a new offering in our digital banking suite, which is called the Investment Distribution Module. And I think it would be nice to just have a look at a brief demo, a short demo there, together.
For sure.
So I think basically, if you look at this, what happens here is this is a client, and he is notified via different means that there is a new investment opportunity available. So you log on to your dashboard, and you see your investment profile over there. If you then look at the products that you can choose from, you see a wide variety there and a portfolio of offerings and investment opportunities delivered there by the bank, but also by third parties. And you can see that this is pretty seamlessly integrated there. And that was your remark just made. And that's also marketplace in motion over here. So obviously, we talked about compliance. You have the usual fact sheet. So all the data need to be provided. Providing that in a consistent way, checked by compliance. I guess all those rules are in there, Steve. So scrolling through that, it allows you to really look at all the facts that you require. And basically, these are also kind of information that usually professional investors have. They look at these sorts of investment in a similar way. So for that, you can decide how much you would like to invest. Obviously, that will be done in limits of the bank, I guess. Compliance again. And then you choose to subscribe. And this is really the subscription part, which is important. So there is this flow that you can configure on product base, but also according to the bank's specific needs, I guess.
Exactly.
So from that, you confirm, and then I think this is quite, what we get now is quite an old-fashioned thing that is like digitized.
Exactly.
But still very, very important.
Yeah.
In the end, you need to sign a contract, as usual, but all of that is obviously also digitized. Using third parties, I guess, for the auto signature, and you can implement that in accordance to your needs. So it's a fairly simple contract there, including all the information. But I think the true value here is that you see the combination of products in there with compliancy, with the rules in this marketplace and this complexity, while you still have one single contract being signed off. And basically at your fingertips, in a few minutes, you can subscribe to a new investment. So that looks really easy and great. It has great UX and UI, but in the background, obviously a whole lot happens. If you're done, you see it in your investment dashboard. So this is all the user. It is easy to use, and that's great. But in the back end, that's the trick. How does that work?
Is when you want to launch a digital product, okay, there are two main phases. First phase is to bring this product that we have in your factory and move it from a paper product, I think, to a digital product. The second thing that is really important is to build around this product all the subscription steps that we see in there, so that the subscription can be done in a few minutes. Because when you are talking about the distribution, you are talking about the UX, you are talking about the patience of the user, and you are talking about the conversion. That is why it's pretty important for us to build solutions that are really easy to use by the end customers, but also that are in real time updated. That's what we saw today, and that is directly connected to the core banking system and the suite that, for example, Sopra provides. So that is why we didn't see it over here. But when you subscribe, you have to pay for the amount of your investment. So as you enter your account is automatically debited for the amount of your investment, and you can see that in your bank statement. Okay, you already made the investment of 100, for example, €1,000 on an investment product.
So a lot is happening there in the background, and I think if we just look at what we discussed, we talked about the past, a bit about the present, what is there today. You indicated a bit about the future, working as a platform, but also 2030, you have some predictions there. What would that look like according to you, Steve?
Well, when we are looking at the banking industry evolution, we first had open banking, and the open banking pushed the innovation and helped the banks to share the data with third-party services. It was not easy, but it was a change. And they see that, okay, maybe in this open banking is a kind of opportunity. So they are finding a new way to monetize this open world. So that's why they are moving today in what we call the open finance. And the open finance just strengthens this kind of platformization of financial service distribution. So for us, we think that the future of the banking industry will be more open, will be more accessible, will be more integrated, as previously discussed today, because you have a real correlation between the e-commerce, the platformization of everything, and the way that the bank can be everywhere and also omnipresent. That is why we think that this embedded finance is the way to integrate the financial services for distribution everywhere on any kind of platform. It can be web, mobile, IoT, is the next fintech revolution.
I think what you just said, you were talking about 2030, but with all these developments evolving faster and faster, maybe it is around the corner before we know it. New technologies, new initiatives, banking models, open banking, as you refer to, has really changed a lot and opened up a lot of new possibilities. But also new business models, and they result in new offers. Advanced portfolios fed by marketplace input. Still being compliant there, it's big challenges there. The role of an advisor can be redefined also via technology. So I think that there's one key thing that we discussed today, and that's basically the key denominator here is the need for speed. So you need to address these changes pretty rapidly. So listening to what you said and what you told me is banks have these great opportunities with this installed base of customers that are direct KYC customers. They have their product factory, and they can actually orchestrate finance for their clients, which is the key role that they had, but also will have and could have in the future. So supported by like state-of-the-art digital platforms, and that enable them with great UX and a cool and marketplace there, taking advantage of these ecosystems around and go for fee business once in a while. That's really interesting food for thought there, and I think some really great insights. And with that, I'd like to leave it there for today. I'd like to thank you, Steve, for your insights.
Thank you.
For sharing your knowledge and your experience in this. I find it really interesting. I'd like to thank everybody for joining us this afternoon. And I believe we leave you with some really interesting food for thought there. I wish you a great day.
Great day.